Good morning, everyone. It's Wednesday, July 13th. I'm Marv Eisen of Timeless Dollar Trading Academy, and we're looking at the Market Watch website for July 13th, where the core CPI year over year and monthly indexes were just announced, and the CPI year over year came in at 9.1% versus the estimate of 8.8%. Okay. 8.8% was the estimate, 9.1% was the report. So let me fast forward to the reaction from the market. Now, here's where the report came out. Now, the estimate was 8.8. The actual was 9.1. Virtually the same. I mean, after all, 0.3% when the report was so high already. So the market is recovering from the lows put in, and if you were an overnight trader, and I hope you're not, just hold on. It's going to come back. The world is not over, okay? Traders will come to their senses. So how do you trade successfully? Well, trading is successful when it's consistent. So how do you be consistent? How do you be consistent? Well, you be consistent, profitably consistent, by eliminating risk. Now, how do you eliminate risk? In trading, it's virtually impossible. Actually, it is impossible to eliminate risk, but being a successful trader is entirely about eliminating risk. So let's talk about eliminating risk in order to be a successful trader. There are signs that the market gives you, that prices give you, and certain indicators give you that virtually assure the market is going to go in a certain direction. Many people trade every day. And it's fine, you trade every day. Why? Because you want to make money every day, right? You want to make money every day. So here's a question that maybe never occurred to you. Why do you want to make money every day in trading as a trader? Well, the reason is you probably had a job, right? You probably had a job, or you have a job, and you trade your time for money. So every day you're making money because you're putting in your time. So you expect to be able to make money every day. You want to make money every day as a trader because you made money every day as a worker, as an employee. But trading is not like that. Trading is not a job where you make money every day. Trading, to be successful, you want to eliminate risk. In a job, what risk is there? The only risk is you'll make a mistake and you maybe get fired. But or your company fails and you go out of business, or you're outsourced or downsized or whatever. But in trading, we want to we want to be able to know the answer to one question: where is the market going today? Okay, where is the market going today? And in order to be successful consistently, you have to be able to answer that question with a high degree of assurance. Now, in the first few moments of trading, and today is not typical because there was an 8:30 report came out that had a very severe effect on prices. But that report wasn't significantly different than the forecast, so I expect prices to go back up. And so this is a reaction to where the market was. And the market is going up. So if I make a trade, I have no reason to believe that the gap is going to be filled. But at the same time, the report was almost identical to the forecast. So why shouldn't I expect prices to go up at least to fill the gap? And so market is coming back, it's regaining its senses. And it's very likely, it looks like it's going to trade within my trading zone. Will it happen? I don't know. And here we come down to assessing risk. You want to be 100% accurate when placing a trade. And that means that you have to exercise patience. Patience is the most important characteristic of successful traders, because you can sit there all day and not see an indication that gives you the confidence that the trade is going to go in a certain direction. So in that case, don't trade. Don't trade. You don't have to make money every day. Let me give you an example of what I'm talking about. Yesterday, okay, let me go back to yesterday. Yesterday I had my Micro E-mini chart. Okay, yesterday I had my Micro E-mini chart, and the market opened. Let me increase the scale so you can see it a little more clearly. Market opened in the morning at 9:30, shot up early after having been depressed overnight. Why did it shoot up early? I have no idea. Neither does anyone else. But it did shoot up early, and traders who had experience and a flair for the dramatic could have jumped on and ridden it up for a nice gain. But this was not a low-risk trade because why did it go up? And remember, you're looking in hindsight. There's no way to know when you get on here that it was going to go up here, okay? So what is the low-risk trade? This right over here. See this candle here? See this? This is almost a shooting star, this inverted hammer. And a shooting star would be higher than the candle previous and after it. It would be, the body would be up here. But still in all, it is an inverted hammer with a very long shadow at the top. It corresponded with the previous high put in at 3870, I'm sorry. So with this telltale shadow, this inverted hammer would give an indication that this trade had a low risk level, okay? The market tailed off during the day. No way to know this was going to happen, right? Could have jumped on here, seeing that it was going to decline, just as easily with the same reasoning that jumping on here, basically a seat of the pants guess trade. This was, and this was as well. But the sure trade, the sure sign was this, okay? And that's what you want to look for to be a successful, consistently successful trader. You want to eliminate risk. So that's my lesson for today. This is Marv Eisen for Timeless Dollar. If you are looking for some advice on how to trade, take my course at timelessdollar.com. You'll come away with some knowledge that will make you a more consistent trader, certainly. And if you are tending to overtrade, it will break you of that habit. Marv Eisen, Timeless Dollar. Have a great day. Trade with patience. Thanks for watching, and I'll see you in my next video.